Hey, here we are. And sorry for that 30-second timeline. I like to do 10 seconds because I know that people don't have any time to wait around for 30 seconds. But welcome back. It's been a long time since I've done this. My name's Rick. If you're watching this live, thanks for being here. If you're listening to this after the fact, keep listening. We've got a fun guest today. We've got Adam Cellini. He's with Urban Young Insurance. He's my personal insurance broker, our team's affiliated partner. And I've been working with his company, Taylor and Urban Young, for at least 13 or 14 years, talking about the market, talking about what you need to know about homeowners insurance and some things to expect. So take a look, take a listen. We'll be right back. Adam, what's up, dude? Thanks for jumping on here with me.
Man, my pleasure.
You're seeing how the sausage is made here with StreamYard. It's kind of fun. We get to have fun little videos, but at the end of the day, that's all fluff. Here for the content, here for the meat. I don't want to make this super long, so we're gonna get into the thick of it. I wanna bring on some market stats that we're seeing from a housing market industry and how it's impacting the real estate side of it, and then tap into a little bit of your industry and what's going on there. So there's this report that comes out with the Orlando Regional Realtors every week, and it's called the Monday Morning Quarterback. I'm going to zoom this in a little bit so we can see the Monday Morning Quarterback, because there's some interesting stats here. As you see the Monday Morning Quarterback, I'm actually going to get us to go away so we can see just the screen in a larger light. Let's see if we can make this even better. Let's present. Hey, we're even better now. So we take a look at this, and there's a lot of data here, Adam. So I look at numbers, and I want to go, what are these numbers actually telling us? Because everything's telling a story, and there's two things that jump out, or really three things. List price to sales price. It says original and final. Do you know the difference between those two, original to final, list price to sales price?
No, walk me through
it. Okay, so we've got it broke down under the price point. So under 250, 250 to 3, 3 to 4, 4 to 5, 5 to 1, and 1 and up. And when we look at that, really very similar months of inventory are from the 250 to 500, right? Between 3.5 to 4.2. We'll get into what that means. Low month of inventory, which means the demand is still high for under 250. But then when we get to over 500,000, it creeps up and over 1 million. So when we say, what are we in, a buyer's market or a seller's market? The number one indicator of that is show me the months of inventory, show me supply and demand. And it's like musical chairs. And with 2 months of inventory, it's an intense game of musical chairs, and someone's going to be left out. With 7 months of inventory, if you don't get this chair, just walk 3 feet, you'll sit in another chair, because it's a lame game of musical chairs, which means there's no fighting, there's no intensity, it's not fun, because you can just eventually get your chair. This tells me that although the month's inventory of total is about 4.5, this is your balanced market. Anything above 4.5 is going to be a buyer's market. Anything less than 4.5 is a seller's market. Buyer's market prices go down, seller's market price goes up. Tracking with me so far?
Oh yeah.
Okay, so we look at that, because when we look at listing homes, we got to look at what's the market there, and we can get super specific if we wanted to. And this is just 1 week's worth. Obviously, this is a small sample size, but it gives us a good snapshot. But we look at things like pool homes, we look at things like acreage, and we can get super hyper local depending on the neighborhood, so that we can help identify the best pricing strategy to list or to offer. Now, the list price to sales price is what percentage did the house actually sell for? And so when we see total 97.18%, that's essentially your negotiation. If a house was listed for 100 grand, they settled and negotiated on 97,118.
Yep.
94 includes their price reductions. So they started on the market at 115, then they did a price reduction to 100, then they settled at 97. What's interesting with that, at every single house that sold last week, there was a price reduction.
No, yeah, look at that.
Under 250, we saw a price reduction of. Can I zoom this in a little bit further? Maybe not.
Yeah, go for it.
I can't. No, I can't. That was a me question, not a you question.
Oh, a little rhetorical. Sorry.
And I'm looking at this with you live, and the new report actually comes out for the monthly stuff. But under 250, we saw an average of a 3% price reduction. Here we saw 2, 2, 2, right? We said a very similar market from 250 to 5, same market. So the average is a 2% price reduction and then a 3% negotiation, which is essentially we're seeing 5% from start of where you think you should be to where you end up. And then on the luxury side, 92 to 97. So a 5% price reduction. That's kind of a lot of money. When you have a house that's $1 million, a 5% price reduction, it's 50 grand, and then take another 30 grand off of that. And so there's $70,000 to $80,000 or more coming off this $1 million stuff. So I look at that because right now we've got 9 active listings and 1 pending. We've got 4 buyers pending, which is great, but our active listings, there's 3 things that are going to impact the price. And we say this whenever we talk to anybody, and it's how is your pricing compared to location? How is your pricing compared to condition? And how's your price in comparison to the terms? New construction is able to get a lot higher price per square foot right now than resale. In large part, not just because of the condition, because there's some beautifully conditioned resale homes, in large parts because of the terms, because they have in-house lending, they have in-house title, and they're buying down the rates to 4.5% or 5%, much better terms. Therefore, buyers are willing to pay you $70,000 more for this new construction because their monthly payment is less. And at the end of the day, there's a whole lot of formula that ends up to some core numbers that buyers and sellers care about. Sellers care about, you want to guess, one thing they care about the most, Adam, what is it?
I feel like it's got to be related to money. It's not price. It's not just the obvious thing.
It's not just the price, because price is the top of the formula.
Okay.
It's what's my take home? What's my net?
Mm.
What's my net? What's my net? What's my net? What's my net?
Mm.
Right? A for sale by owner, when they're saying I'm going to do it myself so I can save money, what they're really saying is I feel like I can net more by not paying you. And if you cost 3%, I feel like I can net 3% or more and do the job. And that's all a hypothetical because we don't know if, unfortunately, we can't say, okay, well, you sell this house by yourself, I'll sell this house, and we'll see who can sell, because every house is unique and different. But one thing sellers care about most is net. Everything, every discussion, every conversation, every commission, every term is just a formula to the net. And there's 2 things buyers care about, and that's where I'm going to bring you in. But the 2 things that buyers care about, again, associated with price, what's my down payment, and then what's my monthly?
Yeah.
What's my down payment? What's my monthly?
Yep.
And so when a new construction can take your interest rate from 6.5 to 4.75, they don't care that they're paying $80,000 more for the house because they're bringing less to the table or the same, and their monthly is $30 less than it would be. They're good, right? How much did you buy the house for? They only care about it when you buy it and when you sell it. Outside of that, what your house is worth doesn't matter. Right? It's just what am I paying on a monthly basis?
Truly. Yeah, it's like stocks in the stock market. I mean, it's like, you know, and in theory, like this is what you can make, but you're absolutely right, man. Like what's affecting you day to day.
What's affects you day to day? Yeah. Here's another one thing that we're going to jump into your data real quick. We've got, this report comes out. Let me zoom in again. This report comes out on the 15th. So we're going to have new data here probably by noon today. Nice. But right now we've got some data, and I wanted to look at specifically, you see I already have it highlighted, 1.3. So in July, which essentially is from June to July, for the first time since I've been in real estate in 13 years, we've had a drop in median price point. For the first time since 2010 when I got licensed, we've had a drop in median price point month over month. Now, year over year, we still went up 2.6. But month over month, Orlando Regional Realtors, went from 395 to 390 in the summer. So we're going, okay, is that a fluke? Well, let's take a look. Now we're in August. Let's take a look at August. Median price point, still up 2.5, but month over month, down 1.4. So we went from 395 to 390. We went from 390 to 384. And then we have this last one in September, annual, still up 2.7, staying consistent. But now we went from 384 to 380, another 1.2. So in 90 days, we've gone from 395 to 380, and we've gone down 3.7%. Do these numbers surprise you?
Yeah, the summer, absolutely. I mean, like you mentioned it, the summer. I mean, that's when people are humming, buzzing. You feel like the activity's high. I mean, I don't want to put the cart before the horse, but like you think about maybe like the election looming. Like if that, I don't know, like if that has anything to do with it, but I mean, it's it's an election year. You're kind of approaching that, but yeah, that's like fascinating. I mean, it's not like we didn't go through election cycles previously. Previous years, like you said, 2010 to now, to see that for the first time is kind of
First
alarming.
time. It's alarming if you're not prepared for it. When people say, how's the market? I say it's different. The market is different, and we can't treat it the same. We used to be able to list a house, and if the house is on the high end was going for 500, you could list it for 525 and get 510 because buyers were willing to pay. Because in 2022, when everything was going absolutely bananas, our months of inventory, when we just said we're somewhere between 4.5, our months of inventory was 3 weeks. It was 0.75. It was nuts. It was wild. And now we have options. And so when we look at this, let's for the sake of math, let's take 1%, not 1.2. Mm-hmm. If the house is worth 500 and every month you're losing 1% of equity, how much money are you losing in equity every month?
I mean, what, $5,000?
$5,000, right? Yeah. So now we have to talk to our sellers, and we have to think about, as sellers, what's my equity position? Because buyers, when things were crazy and the market was going up 1% to 2% a month, I could say pay $20,000 above appraised value, because in 4 months you're there anyway. And if you want this house, let's go get it. Well, now we're going, you actually have to outpace the market by $5,000 in price reductions. If you do a $5,000 price reduction after 30 days, all you've done is maintain the trend of still being overpriced. We've got to be able to leapfrog and get ahead of the snowball and not just keep chasing this thing down the hill.
Yeah.
The election creates uncertainty, and people don't like making big decisions in a time of uncertainty. The election itself doesn't change the housing market. Go ahead.
Would it reflect? I mean, again, like I'm not trying to draw the line too heavily, but like, would it reflect in the price? Is what I'm wondering. Like, as I think out loud about it, like, yes, I understand like the buyer confidence, but to see the median price drop like that, I mean, could it be related to just people not being willing to go out and buy? And now
the uncertainty prevented action, and action resulted in less sales, and less sales means less demand, and less demand says we've got a bigger game of musical chairs, which means, and if you've got 10 houses for sale and you've got 10 people who want a house, then they're going to put the best foot forward because everyone gets one. Well, now we've got 10 houses for sale and only 2 people want a house, which means 8 people are sitting there for another cycle, which means if I, as a buyer, I don't like 7 of them, but 3 of them I really like, I'm going to put my best foot forward to the one I like. And if you say no, I'll go to the next one and the next one, and I'm going to offer you 90 cents to the dollar, and good chance someone says yes. And when they say yes, Adam, and all of a sudden this buyer or this seller who sold their house for $450 when it could have gone for $5 in a balanced market, they've created a new metric. And now next week a new house goes up for sale, and that seller goes, well, my house is just like this one, it just sold for $450. Maybe I'll go for $475 to leave some room for negotiations. Well, $475 compared to the other 9 that are sitting at $500. And that's why we got to get ahead of this thing.
Yep. Yeah.
Right.
Really paints a picture. Yeah.
We cannot predict the future because we don't have that crystal ball, but I can look at this and I can look at inventory and I can see 90 days. I can tell you what 90 days does. I can't tell you what next November does. I can guess, but I can tell you what next 90 days does. And that's how we've got to be able to price it right. So that's the market of the moment that we have right now. Talk to me about insurance, because I wanted to ask you the same question, not exactly on the inventory and demand, because your demand, well, I'll ask you, being in insurance, you guys do all insurance. You've got my boat, you've got my camper, you've got the houses, you've got the cars. Do you know off the top of your head what is the makeup of your portfolio? What percentage of your policies are one category versus the other? Do you have that data?
We're probably still very home heavy. It's shifting. Is that what you're asking? Kind of which
Yep.
product
Yeah.
I
Where's
guess
the bulk of your
reigns
products?
a little bit for us? Yeah. So really in our entire existence, about 13 years, we've been tied into the home closing process. That's
Okay.
been where we've tried to meet people, and where we've met most of the people that we now work with. And then the sale, quote unquote, for us as agents, is meeting those people and then trying to become, really their trusted agency advisor. Let's do everything. Let's package all this one phone
Yep.
call away.
So it starts with
So
the home, and then everything else is the add-on.
almost always
Yep.
starts with the home. So the home is
Yep.
still heavy. And when we were younger, and we were building fast, it was very home heavy because it was easy to do. We were making money, and it felt great, right? Then as we started to look at the data of the book, and there's data out there even outside of our agency, the more well-rounded you can make a household, a client, the more likely you are to retain that person forever, right?
Yep.
If I can do more policies for you, I'm probably going to keep you for a longer period of time. That's just exactly what the data says. So we
It's a
shifted,
convenience
and
factor.
we
Yeah.
shifted heavily.
Yeah. You make things easy for me when it's convenient.
Well, yeah,
I can call one person
absolutely, yeah,
and I'm good. Uh,
yeah.
so I
So
wanted to
I will
ask.
say it's home heavy. It's probably like, if I had to put a number on it, maybe like 60% home heavy
Okay. So
still,
which
compared to
is
like every other
massive, right?
product combined.
When you think about
Yeah,
everything else
yeah,
combined, doesn't do as much as the homes. So when we see the market, and I'm looking at the data again over here, and we see the market that's gone down year over year, 12% in closed home sales, you're seeing that as a direct impact in your business as well.
yeah, absolutely,
Home
absolutely.
sales go down, you go down, and then your
Yeah.
retention is where you go there. So
Hmm.
with the election, yes, you're impacted by these numbers just as being a connection of an affiliate partner. I'm curious, with the Trump administration and his policies, or what he intends to do, how will it impact the insurance industry, for better, for worse, for you, or for the consumer? Do you have any insight on that?
So it's so early, and I always tell people insurance moves at the speed of smell. So it is not like a fast
Okay.
changing, fast paced industry. So it'll definitely be wait and see. Immediately, I'm not seeing like much impacts from maybe like Trump's administration and policies, but I think it's fascinating the ripple effect of who's elected as your president. Like there's people that get elected down ballot as well, right? And you start getting your state representatives, maybe your U.S. congressmen and senators, of course, but then your state representative, your governor. Though obviously governor wasn't up at the same time as the president
Yep.
this time around, but I say all that to say this: Florida still is a unique marketplace compared to the other 50 states. We have strains, we have obstacles here that the other 50 states just simply don't have. So yes, they feel like big things to us because we live here, but we're a drop of bucket, and or we're a drop in a very large bucket when it comes to insurance. So like somebody like the president, the pain has not reached like national levels.
Okay.
Now, Trump has a good relationship. Well, had a better relationship with our governor previously, and I think our governor has helped make some strides in a really difficult time. I mean, 2022 was like where we thought we were getting kind of close to rock bottom with the industry. We thought it might collapse, the home insurance industry down here, and it's not solely on our governor, but like I think just everybody involved made some tough choices, but kind of got us to a little bit of a brighter day here. But yeah, again, like I say all that to say this: like the president, the administration at the national level, Florida has so many unique strains that I'd be shocked if like what we've dealt with here, what we're dealing with here, gets into the national spotlight that way. I
Okay.
mean, it was definitely talked about nationally, but in terms of like policy, I'd be surprised if they wanted to jump in and change something about what's happening down
Yep.
here right away.
Well, that was a little bit of what I was indicating with, people were pushing pause on real estate moves because of the pending results of the election. Yet, whether your guy won or your gal lost, people going, okay, election's over, now move forward. Like, no one decided to do something different. They just didn't want to do something until they knew, in most
Yeah,
cases. And just that
yeah,
uncertainty is like, there's a lot going on. I'm going to wait and see. But no matter what the result was, they're going, okay, now that that's behind me, I can make decisions differently. Now, maybe it's going to change the price point or what they think the stock market's going to do or where they want to put their money, or am I going to keep it stocks or pull out of stocks and buy investment properties? And all of that financial stuff can come in there. But what you're saying is the governor and the senators have a higher influence to the Florida insurance industry than the national president
Yeah,
and
our
okay.
our state officials are making
Yeah.
decisions that impact this insurance industry in
Okay.
Florida so much more than anything that trickles down nationally yet.
Okay, but it's all influence. And a couple of years ago, we've known it. The stats were staggering, something along the lines of we have 15% of the claims, but 85% of the payouts from insurance, mainly with what was happening with roofs and people going in as third party litigators and or adjusters, and essentially the $30,000 roof is a $50,000 claim against insurance, and that insurance has to recoup somehow, some way. So everyone's rates go up, or they just pull out. And so I want to talk about both of those. First, the pull out, because it
Yeah.
feels like Citizens used to be do everything you can to avoid Citizens, and now they're the only ones left at the table in a lot of positions, where Citizens is
They're
probably holding what 50-60% of all the policies in Florida now.
Florida's largest insurer right now. Citizens.
And
They
it,
have more
it used
households
to
than
be
any other
like
company.
avoid them at all costs. Like even 3, 4, 5 years ago, be like, oh gosh, you have Citizens. I'm so sorry. Give me a hug.
Yeah,
And now
yeah,
now
exactly.
it's like, well, it's what you have, because everyone else said, peace out, Florida. I'm not touching you. So what's the cause for that? And tell me about what should be the reputation of Citizens now, because it might have to do with people who think of them in a negative way as going, well, nope, they're not as, their reputation does not precede them. So talk to me about Citizens, talk to me about why people are leaving Florida.
Yeah, yeah. I mean, like, just to give some more content, like Citizens is Florida's safety net, and it's unique to Florida because, like, it's a not-for-profit insurance company that is run by the state. It's funded by the state, and it exists to try to get people through hurricane season with, with insurance. Like, they have looser guidelines, and in some cases, they're less expensive than maybe what's available to a particular home on the private marketplace. It's not a solution for everybody, but like that's kind of why it exists. Those are the two main reasons you would go to something like Citizens. As agents, we even used to look at Citizens maybe as like a little bit of a villain. Like you
Mm-hmm.
writing it and working with them. But and I'll probably mention 2022 a lot because like 2022 leading up to Hurricane Ian, and then Hurricane Ian hitting. I mean, that was a year where we were getting to the end of seeing like 12 carriers go insolvent, like just go financially insolvent, shut their doors for good overnight. All those policies got to move somewhere else. It was chaotic times back then, and Citizens took on the brunt of that. But in those moments, like when you're an agent and you're looking at your book and you're looking at your clients and you're like, what are we going to do? And people are trying to close on homes, and suddenly they just don't have options, especially in Central Florida, where it's probably like the second hardest new business guidelines anywhere in the state. South Florida being the toughest.
Yep.
Citizens kind of not only save the day for like an individual homeowner, but Citizens also and the state also kind of reinsured, backed the private marketplace with some reinsurance at that time. And it was they sort of saved the day and did exactly I think what they're meant to do. Now they're not meant to hold these households forever, but my own perspective of them changed quite a bit. Kind of going through that. But again, like with if I'm having a conversation with a homeowner, they're buying a new home, and this is almost how every conversation goes in Central Florida still right now. It's like, hey, I have this option and I have Citizens. What do you know about Citizens? And I'm going to walk you through it. They're a quirky company. It's like going to the DMV, to have your claim covered. They
Yep.
don't care about customer service because
Okay.
they're not trying to retain you. They just want to help you for a year. But it's, I think it's just having the conversation. Thankfully, the rest of the marketplace is getting a little closer in price where I could be like, hey, there's this option Citizens, but I have this other option on the private marketplace. This is where Citizens is probably going to try to move you to at some point anyways. It's $100 more to do it right now. We could save ourselves a conversation in a year. You don't have to go and get a new 4-point in a year. Like, is there any reason you don't want to just do this now, and avoid
No, I think it's really
being
good.
with a company like Citizens?
I didn't know Citizens was privately held, and that, as you were describing it, I almost feel like it's the FHA of loans, right? It is the
Oh yeah,
government.
it's a good
It's the
thought.
government back to FHA is there to help first time home buyers and to help people with lower credit, or versus the conventional is more of the private sector. FHA is the a little bit more strict, and the PMI is there because there's more risk with an FHA buyer who doesn't qualify conventional. And I think they're kind of in the same bucket. And FHA has been a great
Yeah.
product for a lot of people. And for first-time home buyers with credit scores in the 600s, FHA typically offers a lower interest rate than that of a conventional would,
Yeah.
just because they might not have all the extra PMI perks or anything else out there. But I did not know that about Citizens. I thought they were a private there, and we have Citizens at our rental out there in Crystal River, and I want to touch on that real quick.
Yeah.
Uh,
Yeah, man.
our
We want
our
to talk about
Chris,
experiences. My gosh.
we've hit it. So our Crystal River house we bought in 2021. The last time it flooded in Crystal River when we bought it was 1992. It's called a no-name storm. And then the next two times it flooded was 2023 and 2024. So our house is flooded twice in a matter of 13 months. A complete, this year was a complete demo because
Yeah.
it was 2 feet for a good day in the house. Contents were gone. Appliances were gone. Our fridge was laying on its back because it floated across the kitchen, and then when it recessed, it drained down. So,
Oh my gosh.
um, and we've had a great team, and my wife was able to go all hands on deck, and we've got our flood insurance, thank goodness, because initially I didn't want flood insurance. I wanted to hedge my
Who
bet. I'm like, it
does?
hasn't flooded for 30 years. Why do I want to do this? And insurance sucks until it doesn't. And I say this a lot. Health insurance, life insurance, short-term disability, flood insurance sucks until it doesn't. Uh, I've seen a lot of people wonder or risk, and well, I'll save that question. In my experience, flood is one of the easiest things to get a claim because there's no discrepancy. Did it get wet? Did it stay dry? If it got wet, it's covered in flood insurance. If it stayed dried, it's not, right?
Yeah.
And even if did it get wet to the point of destruction or not, so our drywall destroyed, our appliances destroyed,
Yeah.
our tile
Doesn't take much.
not destroyed, but the grout of the tile was destroyed. So they wouldn't replace the floors, but they would give us enough to disinfect it and regrout it.
How about
As much
that?
as as much as we wanted to get just new floors, rip it up, it wasn't covered there. Uh, what is the theory or fear or reality with making claims and people who are afraid to make a claim because it will raise their rates or they will get dropped from hurricanes to floods to then normal everyday run of the mill, right? Hail is probably the most frivolous, and if your roof's legit hail, then make a claim. But if it's not, that's where a little bit of abuse comes in. But talk to the viewers or listeners right now. If you have what you believe is a legit insurance claim, do it because, or only do it if, for the fear of you might get dropped or have rates increase. So I'm gonna let you talk on that.
Yeah, yeah. I think the conversation, like if I take that call, right, coming out of a storm, hey, I got water in my house. Hey, my roof got blown off. Hey, I got water coming in through the windowsills. Like when I'm having that conversation with people, first thing I look at is their deductible, right? You look at the deductibles on the policy. Let that be your jumping point, right? Because the deductible is like that's they exist to deter smaller claims. And in Florida, we used to have much lower deductibles, and now what almost everybody's got is a percentage deductible on the hurricane side. So your hurricane deductible is like separate from every other covered peril on the policy generally, and it's a percentage, meaning that it's a percentage of one of your coverage limits, your dwelling limit, which is going to be your largest on the policy, and it's going to be your largest deductible on the policy.
Yeah.
So if
Yeah.
if you have the time, if you have the wherewithal, like you can just think through like, okay, what's my deductible and how much above that do I think the damage is going to be, and that's not for me to decide, that's not for somebody to decide. Maybe you get somebody into the house to start either remediating water or and then you could have somebody make an estimate, and you don't have to you don't have to just fire from the hip right away. But in a big natural event, you do want to get in line. Like you don't really want to wait for something like a hurricane, like the two that we just went through. I mean, Milton especially, because that was a really big one. When Milton hits, and you think you have a claim and you think it makes sense to submit it, get in line. You just gotta submit it, and you gotta start the process, because it's not gonna be quick. These companies are gonna be paying out claims all over the state, and sometimes you do have to just save your place so that you can get attended to at some point. So yeah, I mean, you look at the deductible. Hey, does it make sense to submit this? Like I'll cover things in my own house that are maybe above the deductible, just again to protect your claims history. And claims history, for people that don't realize or know, it follows the property and the applicant for insurance.
Okay.
So the property has a 5-year claims history, and then the applicants have a 5-year claims history. So if you've moved or something, even if it's a prior house, even if it's a rental house that you own in Oklahoma, that could pull on your insurance score. All these claims are scrutinized differently, but just your claims history is heavily scrutinized in Florida when applying for insurance. And I think, like you mentioned, that's where some of the fear comes from, because
Right.
you're like, man, I don't want to be non-renewed, or I don't want to be canceled because I submitted a claim. And I'll be honest, it's not really the people that are, I think, submitting claims like large catastrophic things that happen to the house. That's what your insurance is for. Like one of our mentors always told us, like, if you can't afford to replace it, you must insure it. And if it's big and it's catastrophic and you need to be made whole again, like that's what it's for. And don't worry about your claims history or this and that, because believe it or not, the underwriters at these companies also understand that. Like it's not necessarily the
Yeah.
fact that there was a claim. It was, what was the intention behind the claim? Did a roofer knock on your door and talk you into suing an insurance company? That might be a risk that they don't want to take on. But did you have a storm roll through and just cause huge destruction to the house, and did it get repaired? Well, you know what, it's a weather event, it's an act of God. It was completely out of your control, and they're not going to hold that against you most times. If their finances aren't great, they might be careful about just taking on things that have been through a lot of claims, because they feel like it's more open as a risk. But yeah, I think like in Florida, we've kind of started using the insurance policies as a bit of a maintenance policy, and it's not always the homeowner's fault. It's like, where's your information coming from? Who do you trust in that situation? Because everybody can sound right if you just don't have a lot of voices giving you like
Yeah.
a wide view of this stuff. And just depending on like who came to your door, or what your neighbor said, or what your neighbor went through. I think sometimes you can submit a claim, and it was almost like, that's a little bit more just pride of ownership of the house. Like I'm trying to think. Like I had a client once that I was working through an application with them, and they had a hail claim that was about $2,000. It turns out their outdoor AC unit got dinged up on the top, and they just pressed the insurance company, got like 2 grand for the HVAC. I mean, that's not the type of activity that these insurance companies generally are kind of want to take on with their clients.
Yeah.
That's not
and
what
and
it's
that
for, right?
and that'll
And
be
then
attached to you as almost like someone who's willing to nickel and dime the insurance company, and they have the right. They're essentially making a bet on you. They've got to stay in business, which means their goal is that if they look at the scope of all their policies, that they collect more than they pay out, and if they can do that, that's their profit margin, right?
yeah, yeah,
So in Crystal River, or in St. Pete, or in Sarasota, or in all these now West Coast Florida that have had 2 years in a row, can we or should we expect that they're going to go, we've got a losing bet over in this area, and because of that, your insurance premium is going to go up
yeah. I mean,
because,
like it does feel like the exposure has changed a little bit, along Florida's west coast, probably more in the last couple of years than
yeah,
in the other side of the state. Yeah, like the risk profile of just that whole side of the state, it feels different. They have these flood maps, they have data. Like you said, I mean, you got the Crystal River house. It was like 1992 was the last time that they had a flood issue, and then you get back to back flooding situations. Not your fault, not the house's fault. We just have like massive weather events that cause surging of water.
yeah,
And
yeah.
I mean, yeah, like so to your point, yes, like they're looking at the risk analysis of this, and it's like, how do I price this? Like how, because again, like you said, it's a business. So how do I price this in a way that like we're not going to lose our ass on? I guess, sorry for swearing. I'm not trying to.
Yeah, ass is fine.
All right, perfect. Yeah, like how are we like how much how should I charge you like for this
Yeah.
insurance premium? We've had 2 losses in a year. So I mean, yeah, tough questions, right? Like, and maybe somebody will do it, but maybe the cost of doing it is could change dramatically.
And I'll wrap up because that segues into some staggering stats for you. So, are you familiar with the term Liz Pendens?
Mm-mm.
It's essentially suit filed, right? I think it's Latin for suit
Mm,
filed. Liz pendant, suit filed.
okay.
So if you look on the tax records, you can see some property of homeowners, and there's a lis pendens. They're lis pendens. It's a suit filed, and the suit filed is typically typically one of two people. Sometimes it could be from a lien or a company that can file a suit, but typically it's because you're behind on your mortgage or behind on your HOA. And the HOA will be the first ones to take that suit filed and move swiftly with it because they got nothing else going on. Banks will take longer. We currently have more lis pendens in Orlando than we did in 2007.
I'm not surprised.
1 in 2,500 homeowners in Orlando
Mm,
have a lis pendens.
mm,
The difference between 2007 and 2024, at least right now, currently, is equity. Because in 2007, 8, 9, 10, the market took a such dramatic decrease. They not only were behind in their payments, they didn't have equity to bail themselves out. Therefore, they had to give it back to the bank via foreclosure or sell it short. And so when I got into real estate back in 2010, 2011, 80% of the inventory was a foreclosure or a short sale.
mm, mm.
There was 28,000 homes for sale in 2000 selling. 14 months of inventory, right? When we go back to that. I say that because what you just said impacts the two things that buyers care about. Remember, they are. First thing is how much is my down payment, but once that's done, what do they care about? What's my monthly? And insurance impacts the monthly, especially if they went back in 2022 when interest rates seemed high at 6%, and you heard people say, date the rate, buy the house, go get a 3-2-1 buy down. And in 2 years, when the interest rates are back at 4%, you can refinance and you'll be good. Well, guess where the interest rates aren't at, Adam?
They're not at
They're
4%.
not at 4%. And now these people are going, well, shucks, now I'm house poor. Now I can't afford my monthly payment anymore. And my insurance is going up. So what I was hoping to be was 3,300, but turns out I'm 3,800 and I can't afford it. There's my lis pendens. Let's sell it. And we're in a dangerous spot because we've gone down 3 months in a row of 1.2%. That people who bought in 2022, they don't have the equity. So we want to watch for that.
Yeah.
Because the equity has been people's life raft for the past decade. And that equity in the past 3 years isn't there. So I say all of this because if you are buying a house and in the market to buy, you've got to have a real estate agent who understands this, a lender who understands this, an insurance broker who understands this, because the decision you make today has to sustain years down the road. Not, I hope the interest rates drop and I hope that the insurance rates don't rise. Right? We have to look at affordability. And I think that's one of the biggest crises with affordability. And that may change and how it will change. But it's all connected and it's all extremely interesting. So if anyone is still listening to this, what are we, 40 minutes in? Then you probably like listening and hearing about the market. If I'm not in the market at all, how often would you recommend to shop insurance? If I'm not buying new and I'm not selling, should I still be shopping insurance and how often?
Yeah, because I think most people, if you've maybe bought the house in the last 3 to 4 years, maybe 3 to 5 years, to be like generous, you probably haven't solved your insurance problem. You're on a bit of a 5-year plan moving forward,
Okay.
and yeah, like and shopping is very different than actually moving that policy too. You should take a look at the marketplace. You should see what's
Yep.
available because it's changing at breakneck speeds. Like, I know I joked earlier that the insurance industry doesn't change policy wise, but what's available and the price of it is changing dramatically week to week, even with some of these companies that are local to Florida, because they need to make money. They have to take on new business. You can't just shut down forever. Like you
Yep.
have to take on new business to survive as an insurance company. So they're trying to find ways to do that, but they open up a little bit here and then they close back up, and then they open up
Yep.
a little bit here and then they close back up. And the timing can be very fascinating for a homeowner to maybe jump on something that wasn't available last year. I keep telling people on the phone right now, like that are buying new, like it feels hard to them because they're going through it. But I'm like, you have no idea what this was like a year ago. Like we have 10 companies to choose from. I maybe had 3 for this same house last year. Now the
Mm.
average price is still a little high. Like the price hasn't come down, but to just have options, now you're fishing in a bigger pond, and that leads to competition, and that hopefully that only helps the consumer, right? Moving forward, you got to have people in the game to compete and try to bring those prices down.
You brought it full circle to inventory. I said 10 months of inventory, you have options, prices go down. 3 months of inventory, you don't have options, prices go up. 10 carriers, you have options, prices go down. They have to compete. So supply and demand is everywhere. All right, as we wrap this up, I want you to just share with us some quick, just in a vacuum, won't hold you to it, but what are some red light, green light thing that carriers have regarding houses? So age of roof, red light, green light.
Green light 10 and newer. I think red light 20 and older. Green light metal. Red light tile, if you could believe it. Some
Interesting.
carriers.
Okay.
Some are still open to it, but tile roofs are very expensive to replace, and a lot of carriers got bent over a barrel in lawsuits replacing tile roofs, and some got very cagey about taking them on for new business, if you can believe it.
Wow. Okay, that's good to know. And it used to be that tile roofs have a 35 to 50-year lifespan.
50-year roof, yeah. I mean, it was not long ago that we were saying that, and honestly, it probably is still the case. But in 15-year-old tile roofs, what are you going to do? You're going to stop writing 15-year-old
tile
roofs?
because you got people begging and they got shingle. Let me take the safer bet over here, not the tile roof bet.
Yeah. Yep.
Or if you want tile roof, you're going to pay me for it. Okay. Talk to me about, I'm going through the 4-point right now. So talk to me about some electrical, red light, green light.
Electrical's pretty easy. I think you're watching for the hazards. So the red light is really double taps comes up a lot. You're just looking in that hazard box. Exposed wiring. It could seem very silly and very small. But those
stuff that starts fires.
Yeah, exactly. Yeah, is it
aluminum? Stuff that starts fires.
Aluminum wiring is another one. That comes up quite a bit. So yeah.
Yep. And with that, if you're not listening, double tap is essentially where you have two different wires going into the same breaker, right? And so the solution is go get a breaker and put one in one. It's like a $15 solution.
So simple.
But it will stop the sale of a house because it'll stop insurance. So if you're selling your house, undouble tap your stuff. Don't have any exposed wires up in the attic. Aluminum wiring is a big to-do. 2 ways you're going to fix aluminum wiring. You're going to rewire the whole thing. That's the best way to do it. Or you're going to just put little 4-inch strips of copper on the edge of each aluminum, because aluminum inside the house is not a big deal. It's where friction happens, and frictions happen at light switches. And so you get what's called illumicons. You guys still hate illumicons though. Illumicons aren't really solvent anymore. They're fine.
Illumicon and copulum is the remediation for it. Yeah.
Okay.
That is
and that's the Band-Aid. It's about 60% of the cost of rewiring it, but it's still, that's a yellow light, I'd say, if we're talking about red light.
Yeah. That's nice. Nice way of putting it.
Plumbing.
Polybutylene still very tough to place. Polybutylene plumbing was a plumbing material that is pretty outdated, but it's still in some homes, and people don't realize that they have it a lot of the time. Really, just long story short, it just they found that it kind of degraded at the connectors over time with Florida's water being very sediment heavy. And they would fail. They would leak, they would burst, and so carriers don't really want to take them on. Now, I will say I have carriers that will take it present. They're just going to exclude water. So that is actually a better situation than it was again like a year ago. Where I just didn't have carriers that would take it. So I have carriers that'll take it, and you can get into the house, but your water damage is going to be excluded. I think.
And if that's the case, to your quote, if you can't afford it, then you have to insure it. And if you get a house that excludes water damage and one of your pipes bust, that's a bankrupt conversation.
It adds up fast.
Yeah. So be careful with that. Because honestly, to repipe a house, a 3-2, you can get done for $5-6 grand in a day. It's in and out.
You can't afford not to do it in a way, right? Like that. That's makes. And then another thing with plumbing is water heaters. Water heater age, 14 and newer, great for almost everybody. Tankless, accepted everywhere. Don't even care about the age. Once it gets above 15 years, narrows the market a little bit. Once it gets above 20 years, it really narrows the market. So water heater age.
And the greatest thing with water heaters, you walk into some houses and see 35-year-old water heaters that are still cranking strong, but insurance carriers don't care because it's a matter of time. And you can pay a plumber $1,000 to go put a new water heater in, and you got a brand new water heater. As a seller, get your water heater. If it's over 15 years, I don't care how hot the water comes out. You're gonna have to deal with it. Go put a brand new water heater in. Do you guys care about HVAC?
Not particularly. No, I think sometimes if it's on the second story,
Okay.
it could come up. So if it's in the living space, if it's on a second story, that could turn into a water claim if you could believe it. If something were
Okay.
to
No, I
fail.
believe it.
But
Yeah.
yeah,
The drain
the
pipes
age
killer.
the age of those does not really come up in new business guidelines right now. They just, as long as it's in good working order, of course.
Cool. Good stuff, dude. Great talking to you as always. Anything I failed to ask or you want to just sign off with, if anyone needs to get a hold of you or want to shop policy or anything that be buyer beware or homeowner beware?
Yeah. I'll mention a couple of things. You want to talk about statistics? This is something that I've heard from a carrier recently. I mentioned Citizens is Florida's largest insurer right now. The second largest insurer in Florida is people self-insuring. So that means people without insurance, and that's kind of a wild place
Interesting.
to be as a state. Just and look, man, I get it. Like, if the price has gotten so high that you can't afford it, or it just doesn't make sense pay $40,000 for a premium. Yes, those types of prices are out there for some homes. Yeah, I get it. Why self-insure, but to have that be the second largest group of homeowners in Florida is, again, it's a pretty wild place to be. So that hit me hard, and it might hit some of you hard as well. And then I'll mention this as well. Like, yes, prices are going up, but having insurance is still very valuable. Like, the fact that you have it is huge. And if you're not being non-renewed, if you're not being canceled, yes, you could take a look at the marketplace, but be careful before you take that leap, because once you go, they're still going to underwrite it for 2 months on a property policy, and then who knows if you can go back to what you had once you cancel that policy and go after the other one. If, like, God forbid, something happens in underwriting, they spot something they don't like, hey, we're going to get off this policy in 2 weeks. What do you do then? I've seen too many times people get left out in the cold because they wanted to chase the rate a little bit. So having insurance, even though the rate's a little higher, is still a huge win for homeowners, and I don't want to diminish that for folks.
From personal experience, I can agree. The guy we bought our Crystal River house from owned the house outright, and he did not have flood insurance. And so when I did my P&L and was looking at my margins for our short-term rental, I said, I don't want flood insurance either, because it is a $6,000 a year. And that just crushed. I was like, oh, it hurts. This guy doesn't need it. Why do I
Yeah,
need it? And he just happened to be in the right
brutal.
side of the storm cycle. Mortgage made me get it because it's an AE flood zone. So they're going, I'm not giving you a policy on this unless you get a flood insurance, because the AE flood zone, even if you're not in an AE flood zone X is the lowest probability. There's a lot of people, especially with these slow moving storms that have come in and the rising of St. John's River and all these people that are in flood zone X. And you're just one day away from that rain happening again before you're taking on water. And I can tell you, any water is bad water. So an inch of water
Yeah.
will still create the mold.
Less,
So
less, quarter of an inch. It does
quarter
not
of an
take much.
inch doesn't take
Yeah.
much at all. Good stuff, brother. Hey, I appreciate you jumping on here. Anything I can do, you know where to find me. And guys, if you want to reach out to Adam and just let him shop what you've got and let us see if what he can do and bundle your policies and figure it out. Worst case scenario, he tells you you're in great shape. Don't move. Best case scenario, he can save you some money or give you some more protection. Thanks, Adam.
Nailed it.
Appreciate you, brother. All right, guys, that was a long time coming for this, but my intention is to keep educating you and bringing you back some market talk. So if you want to have more guests on like this, maybe different industries, we can bring on home inspectors, lenders, we can bring on title companies. So if you have a request, let me know. If you have any questions around this, let me know, and I can make sure to connect you with Adam. If nothing else, you're still listening, still watching, I appreciate you for jumping on. And if we can ever help you out in real estate, we serve Central Florida, and we've got networking connections throughout the country. So let us know. We'd love to be a resource for you. Take care, everyone. Bye-bye.